Our next speaker is joining us on Zoom. So we have Anna Shires is the VP Associate Director of Community Investment Outreach at the Federal Home Bank of Indianapolis. She wanted to be here with us today, but was unable to, and we're happy she's able to join via Zoom. Anna, can you hear me okay?
Yes. Can you hear me?
Yes. How is that?
And then I will go ahead and, can I share my screen?
Go ahead.
All right. All right. Can you see my slides or are you seeing an email inbox?
I see your slides.
Okay. Okay, great. Am I ready to go?
1 second. I'm
Okay.
gonna get your slides up on our meeting room here.
Okay.
Go ahead, grab a snack. We'll be up in a minute. Okay. All right. Okay. Okay. We're gonna let Anna get started, and we're gonna try to make the PowerPoint a little bigger for you. But go ahead, take it away.
All right. Thank you, Emily. And thank you for inviting me to speak. I am sorry that I'm not there to join you in person. I'm happy to be able to share my information with you, but there's nothing that substitutes getting a chance to meet all of you in person. So I hope the next time this event takes place, I can be there to meet all of you. So as Emily mentioned, my name is Anna Shires. I'm with the Federal Home Loan Bank of Indianapolis. And a key piece of my role is that I am actually based in Detroit. My role focuses on the state of Michigan at large. So excited to be with all of you and talk about Region J. All right. Okay. So I think you know who I am and what I do at this point. Before I start to talk about all the housing programs that we have available. I think it's really important to understand who we are and what we do because our grant programs and our low-cost loan programs function a bit differently than most subsidy out there, and that we really require a partnership through our member financial institutions. So in order to understand that, I think it's imperative that I explain who we are and what we do. So the Federal Home Loan Bank is part of or is a large system that covers the United States in its entirety. And we are carved out into districts, so similar to the Federal Reserve in that sense, but different in the reason and why we exist. So we were created in response to the Great Depression, and we serve as a source of liquidity and capital capital to other financial institutions across the country. So we are not a bank in the traditional sense by any means. You're never going to see an ATM of ours or a branch of ours. We are, in the most simple of terms, a bank for other banks, other credit unions, insurance companies, and CDFIs. So we don't do any direct lending, but we're essentially this kind of massive system that's humming along in the background, in generating $800 billion worth of capital across the country. So Indianapolis is one of 11 regional banks, and you'll see our district is highlighted in blue. We do have a star that represents the city of Detroit, and that is because we opened up an office in the city of Detroit a few years ago now. I think we are the only bank in the country to proactively open up a satellite office, understanding that relationships in different states are critical in order to facilitate both business and community investment. So excited to be here with you again. Now, I want to explain who our members are, because again, that is the way in which any one of you who wants support for your communities or your projects, this piece is pretty critical in understanding how to get access to our funding. So again, we are a membership of banks, credit unions, CDFIs, insurance companies. We have just under 360 financial institutions in the district. And about more than half of those are in the state of Michigan. So the way in which a financial institution is a member of ours, and let's say not Chicago's or New York's or San Francisco, is where the financial institution is headquartered or chartered, which is a little bit more difficult to track. But by and large, we don't have the very national banks in our membership. So although Chase and Huntington and PNC even are very prominently represented in the state of Michigan, they are not our members because they're headquartered or chartered outside of our state or district. But what we do have are pretty much all of the community banks, some regional banks, close to 90% of all credit unions in Michigan, quite a few insurance companies, and then a handful of CDFIs. If you are ever curious as to whether or not a financial institution that you're thinking about that you might have a relationship with is a member of ours, we have a member directory. It's highlighted on the right-hand side of the screen. You can always look up if they're a member. And I use it all the time, honestly. Now getting to the more interesting part and why I'm here today. So we are governed by the Federal Housing Finance Agency, which governs Fannie, Freddie, and the Federal Home Loan Bank System. So we're kind of considered a government-sponsored enterprise. We do not pay taxes, but we are required to return 10% of our net earnings back into the form of grants. So we actually, in recent years, have gone above and beyond what we're required to do. In 2025, we are returning 17.5% of our net earnings back into the form of grants. So this has at least for 2025, equated to over $73 million in grants for the year, most of which we make available exclusively for Michigan and Indiana. So I would say this is a historic amount of money that we are providing back to the communities. It is based on our net earnings. Our net earnings tend to fluctuate somewhat significantly based on interest markets. So what might be a pretty large number this year might look a little different for next year, but just keeping that in mind. So we have a lot of different programs. I'm not going to go through all of these with you today because I don't know if I have that much time, but I am going to focus on quite a few and kind of give you a high level overview of what our programs look like. And I cannot stress enough, our website is actually pretty useful in the amount of information we have available for each program. There's programmatic guidelines, timelines, documents you can download to really get a sense and kind of wrap your head around what these programs look like. But I am going to start with our flagship program, our affordable housing program, which is essentially a development gap funding tool for all of you to use. But we do have a good amount of down payment assistance, home repair dollars, small business grants. We are providing or have provided CDFI support this year and are starting to extend beyond into housing related nonprofits. Again, I'm going to stress this one more time. Our grant programs, by and large, are accessed through our financial institution partner members. So essentially, they're going to be the liaison between our funding and your communities. So our Housing Development Gap Funding Program, also known as our AHP program, is a competitively scored process. We provide up to $1 million in gap funding for development projects. Those development projects can be in the form of new construction, rehab, even shelters, and the money can be used for what is typically acceptable for other housing subsidies out there. So we're looking to support primarily the hard costs related to the project, but also can support a good amount of soft costs that are incorporated into your total development costs. So the money itself is there to support housing units that are both rent restricted and income restricted to those that earn no more than 80% of area median income. So that's what the units and our gap funding that's what we're going to support. We do have some nuance there for rental projects. If you are looking to access these funding dollars for rental projects, we do require that 20% of the units be at 50% of area median income, but not to say that our funding can't go into overall projects that are mixed income. We're seeing more and more projects that have market rate units included in the total project as part of the overall scope of the project. Both for-profit and nonprofit developers are able to access this funding, but the key, again, is that you have to apply in tandem with one of our member financial institutions. So we're going to give you this money, but in return, we're going to ask for an affordability restriction to be placed on the property, similar to home funding, CDBG, of course, tax credits. So for rental projects, we require that the affordability restriction be in place for 15 years. For home ownership projects, it's significantly shorter at 5 years. So again, we had just under $30 million available for this year. We have $1 million per project, and our program the timeline doesn't shift much in terms of the timeline. So typically applications are due in the summer with announcements right around the corner. We'll be announcing on Friday which projects in the state of Michigan, Indiana, and beyond will receive funding. So it is a fair amount of time in between application submission and finding out if you get that award. So I did mention a couple of these threshold requirements, but we do require that these projects be somewhat shovel ready, and that you do need to indicate or show us evidence of site control. That can be through a purchase agreement, market studies that support that the rent that you're charging can be supported by the market. We are going to need some level of third-party cost estimates. So for new construction, construction, that would be a trade payment breakdown. For rehab, that would be some level of capital needs assessments. And then, of course, we're going to need to see that the sources and uses balance. But I will say we don't require that all of your other funding sources be fully committed, but we do need to see at least evidence of an application or pursuit of that funding. And again, it is a scored program. So we are going to incentivize more deeper income targeting in these projects. We incentivize special needs housing. So for those that are disabled, veterans, et cetera. We do incentivize nonprofit developers and prorate points in terms of their ownership interest in the deal. Similar to other subsidy, we do incentivize proximity to amenities. And again, the member financial institution participation. So is that community bank or credit union providing construction lending into the deal, or permanent financing, bridge financing, even tax credit, equity investment? So I don't expect any of you in that room to be able to follow along with everything I'm saying. I know I'm talking quickly because it's a lot of information, but all of this program information is spelled out in a lot of detail in what we call our implementation plan. And for those that are remotely familiar with tax credit, and the application, the implementation plan is essentially the equivalent of our QAP. So for 2026, we will be hopefully rolling out all of the updated dollar amounts, any changes to scoring, likely in February or March of 2026. And I don't expect the timeline for 2026 to change much at all. So you can expect that timeline in that green box to remain somewhat the same. Again, I'm starting to sound like a broken record, but in order to access this funding, you do have to work with a financial institution member. They're the only ones that can hit submit to us in the online portal once the application is put together. So, of course, I want to showcase what's been happening in Region J. I did do a quick glance at the data. There hasn't been a lot of activity with our dollars going into projects. And until you get back to 2019, there was a project, a pretty small project in Battle Creek. The developer was Hope Network, and the sponsoring member was Mercantile Bank of Michigan. And it was a rehab project for a facility for persons with development disabilities. We also saw one in 2019 in Portage. This was by Full Circle Communities, a developer based out of Chicago that seems to be expanding their activity across the state, which is great. This was sponsored by First National Bank of Michigan. This was more of a typical tax credit project. There was a portion that were considered permanent supportive housing units, but also actually mixed income projects. So there were market rate units, but a bigger project, 75 units, and the subsidy at the time in 2019 was $500,000, so they received the full AHP subsidy at that time. So I were days away from the announcements in 2025, but I did want to showcase 2024 awards to you. One star does not indicate one project. It can indicate quite a few projects received in those areas. Sadly, Region J does not have a star. I'd love to change that, which is exactly why I'm here today. But Michigan had a pretty knockout year. I believe that it was the most awards that Michigan has received in any single round. So we're really proud of that. If you ever want to take a look at more of the details on what those projects are, we do have links, and hopefully Emily or someone else on her team can send out this deck to all of you. So I wanted to just myth bust a little bit on what this subsidy can do and what projects it supports. So by and large, the bulk of projects that receive awards are rental, but we are seeing an increase in homeownership projects. So for anyone that is pursuing homeownership, don't be too discouraged. We do see a significant amount of projects that are considered large scale scale in terms of 20 units or more. But I do want to mention and highlight that there are quite a few projects that are less than 20 units that are receiving our awards. So these are not all tax credit units or projects. And at the bottom, you'll see 50% typically are tax credit projects. And we are seeing an increase in rural projects and activity. I expect this percentage to be a little higher for 2025, and it might continue to be higher in 2026 as we think about our scoring. I will just say that. So I wanted to highlight some of the really high percentage of projects that receive awards and where they're getting points. It seems pretty critical based on what you see that top red highlight of member involvement. So financial institutions having some sort of participation in the deal does make a difference. Nonprofit developers do tend to do exceptionally well in our rounds, even if it is a portion of ownership in the development deal. And we do incentivize low income targeting in our projects. So you're probably wondering who in your respective region, from a financial institution perspective, is supporting these type of applications. This is a list of showing 2022 to 2024. I haven't updated it with 2025, but please take note because if you have any established relationship with any one of these financial institutions, I cannot stress enough, that is probably the first institution you'd like to approach if you're interested. But I'm also in my role here and available to think through other financial institutions that you could be partnering with in order to access AHP. We have seen a very significant increase in Michigan investment, and that is because a lot of new partnerships have been formed between developers and either those that are already participating that you see on the screen or even new financial institution partners. Again, I mentioned we have a lot of different programs, and I wanted to just quickly cover our down payment assistance programs in case that is of any interest to anyone in the room. So we have had just under $10 million available in 2025 for what we call our launch, our regulated down payment assistance program. It is a first come, first serve program, so it's not competitive. And essentially the way it works is any member financial institution that wants to help support any given community can sign up and start submitting applications to us for first-time home buyers, and they can access up to $20,000 if they make at or below 80% of the area median income. We are not in the business of underwriting the mortgages at all. In order for these households to obtain our funding, we are simply, by and large, underwriting to make sure that they are, in fact, income eligible for our down payment assistance. And I know we have MISTA or MISTA adjacent people in the room, Liz with Great Lakes. We often see our down payment assistance stacked with other down payment assistance out there, whether it is MISTA's or Liz was just mentioning this, down payment assistance through CDBG or other forms. It can all be layered together. We are happy to be in last position with that. So here are just a set of members that participated in 2024 across the state of Michigan. In case any of these if you have established relationships with any of these. We also have our home repair grant dollars. We had just $10 million available in 2025. This is for owner occupied rehab grants up to $15,000 for critical repairs. Obviously, we're not in the business of supporting aesthetic upgrades, but I think all of you in this room are probably not a stranger to the amount of home repair needs that we're seeing in the state of Michigan. So this is to support households at or below 80% of the area median income. It is first come, first serve, and our bank members are the ones to decide whether or not they participate in this program and which communities they want to serve. What I will say is that we see a lot of financial institutions partner with nonprofits to kind of help them create a pipeline of eligible households. I see a lot of nonprofits helping to facilitate bids in communities. So a lot of senior households are accessing these dollars. Sometimes we see nonprofits, even help with income documentation. So that's a way in which maybe some of you can get involved in this program. We actually have a lot more members participating in our home repair program than we even do our down payment assistance or even our affordable housing program. I think that certainly reflects the need in all of our communities, but hopefully this is encouraging for you to see the amount of members that are in Michigan and participating, and it tends to grow year over year. I did want to show kind of the activity that's taken place in the last 5 years geographically. And this is a list of financial institutions that have helped support communities in Region J in case any of these are partners of yours. We also have our Home Boost, what we call our special down payment assistance dollars. And this is essentially for first-time home buyers, but first-generation home buyers that have household income at or below 120% of area median income. So this map just shows some activity that has taken place in 2025. And in total, just for 2025, we've supported over 800 households in the state of Michigan, over $13.5 million invested into all of your communities. And I think maybe the most powerful number is that we've helped facilitate $60 million of home value purchase by low to mod to missing middle home buyers, which is great. I know I don't have a ton of time, so I'm not even going to touch on the programs that are highlighted in red. But again, just know that there is more information available on our website for you. I also just want to mention that we do have just a couple of programs that aren't conventional for us, and that the money is not flowing through financial institutions, but these are actually direct investments we've made into particular topics that are important to us at the Federal Home Loan Bank of Indianapolis. I'm not going to go into any detail, but we have a joint partnership with MISTA on a Tribal Nations Housing Development Assistance Program. We are also actively involved in direct investment in Detroit for heirs property initiatives. I know there's some great work being done in Calhoun County as it relates to heirs properties. I would just say stay tuned for potential partnership opportunities in Michigan moving forward with heirs property in 2026. And so I know that I'm at time here, but I just wanted to say we have a lot of information. It comes out quickly, particularly as the new year starts. That's when we start to announce all of our grant funding for the year, all the programmatic changes, if there are any. So I'd say now would be a really good time to sign up for our newsletter, because that's the first place we tend to send out any announcements as it relates to our programs. So if you could do me a favor and hopefully you a favor of signing up, that would be great. Otherwise, we have a ton of information online. And lastly, I am here to help all of you as it relates to accessing these programs, but with a particular emphasis on our affordable housing program. I've been able to establish some great relationships across the state with financial institutions and developers, and have cultivated relationships. And that's kind of a big critical piece in starting to see dollars flow to Region J. So I'm happy to talk about any projects you may have in mind for 2026. I'm happy to look at the project with you and get a sense of if it could be competitive and who could be a potential partner if you don't have one on a financial institution level. So I'll stop there. Happy to take any questions if there is time. Sorry, Emily, if I went over time. And thanks again.
Fine. Yeah, no, thank you so much.